Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Staying put, Japan's Prime Minister Shigeru Ishiba is vowing to stay on despite failing to convince voters he can ease a cost of living crisis and secure a trade deal with President Trump. Fighting back, EU envoys are set to meet as early as this week to draft a retaliatory plan in response to a possible no-deal scenario with the U.S. on tariffs. And Israel has warned it will move into the heart of the Gaza Strip as it accuses Hamas of stalling on U.S.-brokered ceasefire talks. It's just gone 8 a.m. across the Emirates. I'm Joanna Bersace in Dubai. Well, we're gearing up for another big week, especially in terms of earnings. We've got a lot of tech earnings to get through in the U.S., the likes of Tesla, Alphabet, Europe as well. Things are really beginning to pick up momentum with many of the European banks reporting towards the end of the week. And, of course, that ECB meeting. So quite a lot to get through. This morning, we are seeing the S&P futures not do a whole lot, up about 8 basis points. We saw a bit of a pullback for Wall Street on Friday, though taking stock of the week last week. Let's not forget, on Thursday, we saw new record highs for both the S&P and the NASDAQ as we speak about better U.S. bank earnings and the better macro backdrop out of the U.S. data that came out last week. Remember, those retail sales figures were very strong. European markets this morning dipping slightly here as we talk about EU leaders coming together and thinking of some countermeasures to those U.S. tariffs. So we're going to get a lot more tariff discussion in the coming weeks as we get to the August 1st deadline. And then dollar yen in focus today. And we spoke about this at length in the run-up to those upper house elections this weekend. Not that much of a surprise, really, because the anticipation was that the ruling LDP party would lose their majority. That did transpire this morning. You are actually seeing the yen trade firmer versus the USD about at a 0.2% or so in the run-up to these elections. It did lose quite a little bit of ground, down about 1.5%. So we've recuperated some of those losses, perhaps because the big event is now out of the way. So we'll talk about more about that on the show. And then Brent, the energy complex, sitting just shy of $70, $69. One of the developments that came out late on Friday was that the EU have now approved another round of sanctions on Russia petroleum products. So again, that could maybe lead to a bit of a tightening in that market. But for the week as a whole, Brent still traded in the negative. Okay, let's push on and check in on how markets in Asia are faring. Avril Hong is in a Singapore studio. And Avril, of course, a lot of focus on those Japanese elections over the weekend.
Yeah, and that historic setback for the ruling coalition ultimately seen as not good news for Japanese assets. We might see a bit of pressure coming in for export-related stocks given how the election results could inform trade talks to come. But there are also investors that believe that domestic-oriented stocks could see support given if we see any traction among opposition lawmakers about tax cuts. Today, we have stock markets in Japan. They are shut. Futures are edging lower. You talked about the yen earlier, firming up a little. This is more of a sell the fat kind of response. Ultimately, any gains expected to be short-lived. And don't forget that when it comes to these gains on the yen, it's only partially recovering the losses that we've seen since early July. This week in Japan, we also have a 40-year bond auction to get through. Now, just quickly talking about some of the other assets that we're seeing in Asia, including the Hang Seng, that today briefly topped 25,000, and this is the highest since early 2022. A lot of tech optimism going on there, but as you say, that focus on Japan for now. Ju?
Yep, thank you so much, Avril. Let's pick up the discussion about Japan. The Prime Minister, Shigeru Ishiba, says he will stay in office despite NHK reporting that his ruling coalition lost its upper house majority in Sunday's election. This marks the first time since 1955 that the Liberal Democratic Party will govern without control of both chambers. Let's bring in our North Asia economics and government editor, Yuko Takeo. So I was speaking about this at the top of the show. The results are pretty much in line with what the polls have been predicting. LDP have lost the majority in the upper house. They're currently not facing a majority in either the upper house or the lower house. The question is, can the Prime Minister actually stay on? What does it mean for his future?
Yes, so Ishiba's coalition government has missed securing a majority by 3 seats, and the bottom line is, as you say, he's lost control of both the upper house and the lower house. Ishiba has already said multiple times last night that he'll stay on despite the result, which suggests he'll have to somehow cobble together enough support from opposition parties for now. That means he'll likely have to make concessions to opposition party demands, meaning more fiscal spending in some form if he does manage to stay on. But given the historic nature of the loss, it seems difficult to see Ishiba remaining in power for much longer. This is the first time a leader of the LDP has lost control of both the upper and lower house since the party was founded in 1955. And all three LDP prime ministers who lost an upper house majority have left within 2 months. So it's hard to see Ishiba managing to avoid that fate.
Yeah, certainly a lot of pressure is on him, even though he's insisting that he's going to stay on in the role. How could opposition parties take over?
Technically, they could. It's a possibility since they hold more seats than the ruling coalition, but it seems like a very remote possibility as it stands, given those seats are split between a dozen or so parties, and it's very unlikely they'll be able to come together to form a government. It probably make more sense for the larger opposition parties to try and influence policy through the leverage they have over the ruling coalition as the LDP struggles through for now, and wait for the next general election to consolidate more power.
So August the 1st is an important deadline for countries all around the world, these trade talks and the pressures on Japan to secure a trade deal with the U.S. How does the election result of the weekend impede or actually serve as an obstacle to the continuation of those talks?
So the trade talks, there's something that has been hanging over the election as well, and essentially it remains unresolved for Japan as well. Japan is set to face across-the-board tariffs of 25% from August 1st, barring a deal with the US. And so far, there's been nothing really concrete to show after Japan's chief trade negotiator, Akazawa, has been over in Washington 7 times already. He's set to fly again this week as well, but now the ruling coalition and Akazawa will have to continue negotiations from a weaker domestic position, with the deadline for higher tariffs coming up in around 10 days now.
Yuko, thank you so much for giving us an overview of really important election results. Bloomberg's North Asia Economics and Government Editor, Yuko Takeo. Well, just getting you up to speed on some of the latest airlines news that we have breaking now from Alaska Air. And the commentary that we have right now per the FAA is that Alaska Air has requested a ground stop for mainline and Horizon operations. So this is information that has just come to light just a couple of minutes ago, waiting more information as to the reasons why they have requested this ground stop. But this is just breaking in the last few minutes. Later on in the show, we will have Danny Lee coming on to talk us through this and a lot more that's going on in the space as well. Well, a busy week ahead for markets. European Union envoys are set to meet soon to formulate a plan for how they'll respond if the bloc cannot secure a U.S. trade deal by President Trump's August 1st tariff deadline. Joining us is Ketaki Sharma, founder and CEO of Algorithm Research. So again, as I was highlighting at the top of the show, we're coming up to another quite important week for markets. Let me just start off by asking you why you think U.S. markets have been so resilient, and the fact that we did briefly on Thursday get to new all-time record highs for both the S&P and NASDAQ.
Sure. So I think U.S. market has been very resilient because of the recent announcements and the recent OBA passing, right? So with the OBA, we already have like a fiscal stimulus to the U.S. economy. So there is obviously a greater disposable income in the hands of consumers. And as you know, U.S. is a consumer-driven market, like most markets. It's a consumer consumption-led growth. So that has provided that fillip and the positive sentiment and the positive impact to the markets.
We have big tech earnings coming up this week. We know that the AI-related stocks or tech stocks constitute around 30% of the overall index. How important a week do you think this is going to be for the continuation of this trajectory, the bullish trajectory?
I think it's going to be really important. But what we see now is just like the tip of the iceberg, because, you know, with inflation rising, which it will rise in the U.S. because of tariffs, because of this fiscal expansionary policy, and if the rate cuts actually come into play, there's going to be inflation for sure. But that will expedite AI adoption by small businesses in particular. So this is going to be a huge plus, and we would actually see a huge fillip to productivity, and that can actually save the day for, you know, the inflation trajectory going forward.
Yeah, interesting. You talk about the inflation trajectory being upwards. Are you seeing signs of that? Because the CPI data on the surface, at least, surprised to the downside. And that is the 5th consecutive month in a row that has happened in the U.S.
Absolutely. So that's the headline number. But in fact, if you look at the details, you would see things such as furniture, apparel, they've gone up significantly. And that this is just the beginning. We expect this trend to actually unfold in the coming months.
So what does that mean for Fed policy? Are they right to be in wait-and-see mode?
Absolutely. I think wait-and-see mode, perhaps no cuts are needed at this stage. But, I mean, there are more factors at play than just economics.
I mean, definitely more factors at play. So assuming Powell stays the line, holds the line, and doesn't cut interest rates, the markets are going to start looking ahead to who his successor is. And in all likelihood, we're going to get someone more dovish than the current Fed chair. How do you account for that in terms of how you marry up, you know, the macro outlook with those inflationary pushes coming in and the real possibility of a very dovish chair coming in 2026?
Yeah, well, at least you're pushing the can down the road. You're not having it right away when you already have like a expansionary fiscal policy that has come into play, the tariffs that have come into play. So it basically means more money chasing probably fewer goods. So there is inflation that is going to, you know, come up. And we definitely don't need a rate cut at this stage. Okay,
what does that do to markets then? Would you still want to be invested in equities here? Would you touch fixed income?
Yeah, absolutely. I would still look at equities. I think, you know, there is still, so it's mostly consumer-driven growth. So we still think that, you know, that is going to help over a period of time. If the rate cuts actually happen, then there is a bigger boost to GDP for sure happening. And then the markets will actually surprise on that.
What about the rest of the world? There was a period towards end of April where people started saying, this theme of U.S. exceptionalism is over. I'm going to start hunting for opportunities in other markets. Do you think that has subsided, or is there still a feeling that there are selective opportunities in other parts of the world as well?
Well, there's certainly selective opportunities in other parts of the world. So every time there is a domestic story going on, countries that have high disposable income or countries that have bigger domestic demand, a bigger domestic population, they are bound to benefit, and especially those with, you know, a continuation in policy. So I think there are stories in emerging markets as well that need to be like closely watched.
Yeah, the other thing that this sort of all of this comes together in one release valve, and that is the USD. And for so much of this year, the USD had been underperforming, but we've started to see stabilization there. Do you think that is just a reflection of how well U.S. stock markets have done and the fact that people are once again quite positive about the outlook for the second half of the year?
Yeah, I think thanks to the fiscal policy that has kind of like already given that boost to GDP, I think that has given some help to support the USD.
Yeah, makes sense. Ketaki, thank you so much for coming on. Ketaki Sharma, founder and CEO of Algorithm Research. Now, in geopolitical news, Israel is set to make its first push into a central town in Gaza as it accuses Hamas of stalling at U.S.-brokered ceasefire talks. We are live in Jerusalem next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Israel is warning it will move into a town at the heart of the Gaza Strip as it accuses Hamas of stalling at U.S.-brokered ceasefire talks. The Israeli Defense Forces told Palestinians in parts of Deir al-Balah to evacuate southwards to a tent city. Meanwhile, U.S. hostage envoy Adam Boehler told CNN that negotiations between Israel and Hamas are closer than ever.
Hamas is very hard-headed. They've been offered many things that they should take, and it's time for Hamas to release the hostages. So I'm more optimistic than I was because all of those factors are there. We've got an A-team negotiating it. Now what I really want to see is Hamas take action. And if they don't, I'll tell you something, Israel's going to have to take some kinetic action.
For more, let's go to Jerusalem now and speak to Bloomberg's Dan Williams. Dan, how significant is it that Israel are pushing into Deir al-Balah?
Well, to judge from Adam Boehler's comments that you just aired, kinetic action, which is code for military strikes, is imminent in this town that Israel had skirted previously during this more than 21-month-old war. The reason for that skirting, we're told, is that the Israelis and some Palestinians believe that in this town were held hostages, a group of hostages, potentially a large number of them, hostages that Israel wants to get out alive through negotiations or possibly through a military rescue. It now appears the Israelis are signaling that they're willing to take this town in order to continue pressure on Hamas, to continue the conquest of the Gaza Strip, even potentially if there's a risk to those hostages. The question is whether this will be borne out on the ground with actual troop advances or whether this is an effort to generate more pressure on Hamas in those talks being hosted by Qatar to capitulate, to yield the issue of hostages rather than see more death and destruction in the Gaza Strip.
What are the main sticking points this time around? Because there was renewed hope, especially after the Iran-Israel 12-day war, that some progress could be made. And indeed, we know, as you said, that negotiators were sent to continue along with those ceasefire discussions. What are the sticking points this time around, Dan?
The sticking points this time around are sticking points we've seen before, except right now we have the rubber hitting the road in terms of us really being on the last batch of hostages, 50 hostages down from the 250 taken by Hamas on October 7, 2023, that attack which triggered this ongoing war. Whereas in previous ceasefire talks, Hamas may have felt it could give up, and I'm putting those in quote marks, it could give up some of those hostages for the short-term gains of a ceasefire. Now Hamas realizes that these truce talks are not just instrumental, they're existential for Hamas. Israel says that a truce, if it leads to an open-ended end to the war, must also see the end of Hamas rule and the end of the Hamas arsenal in the Gaza Strip. Hamas is not willing to accommodate that. So the question is whether the sides can pull off another ceasefire, which would not necessarily lead to an end of the war when they remain far apart on what an end to the war would look like. That, yet again, is keeping the sides apart, despite the optimistic remarks we heard just then from the Trump administration, which really would like to see this war in its rear window.
Bloomberg's Dan Williams in Jerusalem. Thank you so much. And for a look at some of the other stories we're following today. Iranian media reports say agreements being reached for talks on its nuclear program with the UK, France and Germany. A state-run agency says the talks planned for Friday will be at deputy foreign minister level. It says the discussions will be separate from indirect talks with the United States, which have stalled since Israel launched attacks on Iran in June. Ukraine says Russia has launched a massive air attack using missiles and drones. Air defense officials say explosions have been heard across the country, including in western regions and the capital, Kyiv. Earlier, President Volodymyr Zelensky said his government had proposed a meeting with Russia this week, more than a month after the previous round of direct talks. And coming up, TSMC reaches a key milestone after posting a bullish sales outlook fueled by AI demand. We'll have the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. TSMC has cited FX volatility as a major source of uncertainty affecting its profit margins. That's after the Taiwanese dollar surged nearly 11% this year against the U.S. currency. CFO Wendell Huang told us exclusively the chipmaker is constantly reviewing its hedging strategies.
We don't predict the Taiwan dollar. We simply described the potential impact to us. And as I said, there are 6 factors affecting the profitabilities. Foreign exchange rate is something that we cannot control. But there were such instances before where the foreign exchange rate was not in our favor, but we managed to lean on other factors so that we are able to keep our profitability. And that's what we are planning to do.
Do you have contingency plans in place for a more rapid appreciation of the Taiwan dollar?
It goes back to what impact our profitabilities. So there are the factors that we're able to control. We will definitely work hard on those factors to maintain the profitability. We use different hedging alternatives. The first one is to just simply sell the US dollar in the market. Spot market, and we also use forward contracts, and we also move part of the cash, the U.S. dollar cash, to a offshore holding company, which the financial statements are denominated in U.S. dollar, not in NT. So that saves our hedging cost.
Which tool your priority, or is your priority?
It's a combination. At the same time, you want to sell the spot, which is the easiest one, but there is market appetite to consider. So you go to the forward contracts, still there's also market appetite and cost, and hedging cost. And then we've been using this capital injection to the offshore company for years. So there's a combination, and we will use those combinations.
That was the TSMC CFO Wendell Huang speaking exclusively with Bloomberg's Annabelle Jewelers. Well, a lot in focus the next week. We have some major tech earnings coming through over the course of the next few days. Alphabet, Tesla, Microsoft, Meta, Apple, Amazon, all reporting. So stay tuned for that out of the U.S. And in Europe, we get results out of some of the big majors as well, including Ryanair today, that is at the end of this hour, in addition to European banks. So lots of micro data to get through. And of course, we have the central bank meetings as well to watch out for, the ECB on Thursday. So S&P futures, NASDAQ today leaning towards the green, European markets down about 0.3%, as we also talk about the ways that EU are looking to respond to those tariff proposals out of the Trump administration into that August 1 deadline. Now, coming up, we discuss the divergence in equity capital markets between the UAE and Saudi Arabia with Miguel Azevedo from Citi. That's next, and this is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Staying put, Japan's Prime Minister Shigeru Ishiba is vowing to stay on despite failing to convince voters he can ease a cost of living crisis and secure a trade deal with President Trump. Fighting back, EU envoys are set to meet as early as this week to draft a retaliatory plan in response to a possible no-deal scenario with the U.S. on tariffs. And Israel has warned it will move into the heart of the Gaza Strip as it accuses Hamas of stalling on U.S.-brokered ceasefire talks. It's just gone 8:30 a.m. across the Emirates. I'm Jemana Versace in Dubai, gearing up for another big week for markets. And remember, on Thursday last week, both the S&P and the NASDAQ reached another all-time record high. The backdrop of positive data, those retail sales numbers coming through, surprising to the upside. Strong bank earnings last week. And then this week, looking ahead to some of the tech earnings that are coming through as well. You could say, though, that the bar is pretty high for a beat this time around. S&P futures up 0.1%. European markets dipping towards the red, down about 0.3% as we head into the open. And this as we gear up for a big week in Europe, too. We've got a bunch of European banks reporting and that ECB meeting on Thursday. They're not expected to change the interest rate, but still, the language, the guidance, the commentary around the evolution of the economy is going to be key and parse for details. Dollar yen in focus, as you'd imagine, after those upper house elections in which the LDP did see a defeat. The Prime Minister has said he wants to stay on. You're seeing a bit of strength transpire this morning in the yen, though in the run-up to these elections, it's lost about 1.5%. And we'll see where we go from here. Remember, it is a national holiday in Japan today, so JGBs and the Nikkei are closed for trade. Let's see what they do tomorrow. And then Brent hanging in at around $69, flatlining here. The big measure that was announced on Friday was that the EU have approved another round of sanctions against Russian petroleum products. So that could lead to some tightening of the market, albeit without the U.S. participation. So this is where we are right now. Energy complex hanging in around $69. Okay, we've talked about Japanese markets. Let's also check in on China markets. Avril Hong is in our Singapore studio. And I also mentioned the ECB were not cutting rates this Thursday. We did not get any change interest rate decision out of China today.
Yeah, the loan prime rate left unchanged, but as we've been discussing earlier on in the program, you're seeing this China stock rally, including on the Hang Seng today, briefly topping 25,000. There's a bit of tech optimism, partially to do with the positive backdrop from the likes of TSMC last week, hitting the $1 trillion club. Then you have Chinese authorities also look to be addressing some of the intense competition in the food delivery sector. But aside from that, the CSI 300 is also pulling ahead today. There is optimism surrounding the confirmation that sovereign wealth fund actually bought ETFs in the first half of this year, and then add to that the expansion in money supply that looks to be accelerating in China. This chart from MLife's Mark Cranfield shows you how it's kind of leading the way for the CSI 300, which has been bounding or rebounding from the April lows, and it also suggests that stimulus is feeding through and that the rally that we're seeing so far in mainland stocks has legs, has room to run further. Jumana.
Avril, thank you so much. Avril Hong in Singapore. Now, the UAE is seeing renewed momentum in equity capital markets heading into the second half of 2025. Planned deals are building on the successful debut of a residential real estate investment trust, which helped revive sentiment after several disappointing listings late last year. Meanwhile, the picture is somewhat muted over in Saudi Arabia as firms eyeing share sales face investor caution over valuations. To discuss further, joining us now is Miguel Azevedo, Managing Director and Investment Banking Vice Chair for Middle East and Africa at Citi. Good to have you with us. Just in the intro to you, we were talking about the success of the REIT, the Real Estate Investment Trust, and of course Citi were a book runner on that deal. We spoke to your colleague Rudy Saadi around the time it launched. Correct. The deal seems to have done quite well, and I would say, despite all the odds, despite everything that has happened globally, also with geopolitics as well, the war that kicked off throughout June, why do you think these local markets have been so resilient to some of the external shocks?
Yes, well, I think the economy here in the region is doing well. It's not all about oil. It's actually about many other sectors, and Dubai in particular in that respect. And if you remember, the REIT was actually one of the first transactions after the uncertainty around Liberation Day. I think it was actually the first transaction to hit the market. Yeah. And that was really on the back of strong local demand. There is significant amount of demand locally these days. So the Middle East is really becoming an option for companies to list. And on the back of that, we went global, and we had the right level of demand, the right level of pricing. The transaction is doing very well in the aftermarket. So I think it's a nice transaction.
Do you think that that gave confidence for other companies in the region to list, looking at how well, or at least in Dubai, looking at how well the REIT did?
No, absolutely. And, you know, it's Dubai, it's Abu Dhabi. In Abu Dhabi, we have done 2 accelerated equity offerings. They went very well, very sizable. We are now seeing Saudi also doing some very relevant transactions. The IPO of Flynas was good. We are working right now on a very big transaction in Saudi. I think the markets are back, definitely, and doing reasonably well.
How would you say the ECM outlook is for the second half of this year? You seem to be pretty bullish. Are you equally bullish for both Saudi Arabia and the UAE?
Yes, I think both will see transactions in the rest of the year. I think Saudi is seeing some more sort of a pause in terms of new transactions other than this one that I have just alluded, which is a rights issue for Aqua Power. I think it will be a busy second half. It will not be super busy, but I think very healthy. Valuations are healthy. That's very important. I think Saudi was, a bit, overexcited at some point, but now I think it's very reasonable.
Yeah.
So yes, I'm very positive for the rest of the year.
How important is it that the newly listed shares perform well? And the reason I ask this is because in Saudi Arabia, obviously you had Flynas, you had Specialized Medical. Those stocks didn't perform very well in secondary market. Has that dented sentiment, or are investors willing to look past that?
It always impacts. But sometimes it's like a bit of a vaccine. It shows you that what you need to do going forward. And we are talking of developing markets. That's only natural that you have some transactions going well, others not so well. I think we are settling at a level where transactions are doing reasonably well. REIT is 15% up.
Yeah.
That's like scientific. It's really where you want to price things. So, lessons learned, I think.
Yeah. Do you think that the foreign investor community is approaching the opportunities differently in the region? What is the feedback that you're getting from foreigners? You mentioned that local demand was strong around the time you launched the REIT. So what are foreign investors asking for?
For some time, there were no IPO activity globally, and the Middle East was still going. So obviously, it was the darling of the market. Now IPOs are back elsewhere, so the Middle East is just another market. No one has to buy Middle East, but everyone wants to buy Middle East. So it's just normal. I think we are back to normality, where Europe is firing, US is firing, Asia is now back on. So I think that's very healthy. And that's what we should see going forward.
Yeah. So it's not just about IPOs as well. There's been secondary listings too.
Yeah.
How does that complement the full ecosystem of what you have in the pipeline? Because we've been speaking more about how companies are looking for different liquidity opportunities.
Yeah, so people are making sure. The uncertainty around the last 6 months gave us a lesson, which is, if you can set up your balance sheet properly for the future, for the uncertainty, do it. This is true on equity and on debt. So people come forward, and you don't do an IPO when you need. You do an IPO when you can. And so people are moving forward, coming to the market, taking advantage of the windows. The windows are shorter and shorter, so it takes a lot of planning. But I think we have a lot of clients here in the region that are getting ready. That doesn't mean they will pull the trigger tomorrow or day after. But there's a very healthy pipeline of both government and privately owned companies coming.
Any specific sectors?
As the market developed, you expect to see companies coming to the market from the main sectors in the economy. If you look at UAE, for example, which is a bit more diversified, you have real estate, you have retail, you have hospitality. All these sectors should come. You also have infrastructure, which we have a few of them. Transportation, that's another sector that hopefully will come to the market.
Okay, you're very bullish. I just need to end it because, you got to ask a critical question. Where do you think the biggest downside risk could come from? What could derail this IPO momentum at this point?
I think from an external standpoint, uncertainty around the world and sort of anti-globalization sentiment. From the market, companies being too greedy in terms of valuations.
Miguel, really good to chat to you. Thank you so much for coming on. That was Miguel Azevedo, Managing Director and Investment Banking Vice Chair for Middle East and Africa at Citi. And for more of these stories looking into the intersection of wealth and power in the region, sign up for our weekly Mideast Money newsletter on Bloomberg.com. Now for a look at some of the other stories we're following today. United Arab Emirates-based Al Futtaim Retail is buying a major stake in Saudi Arabian firm Sanomi Retail for $666 million. According to a statement released on Sunday, Al Futtaim Retail plans to purchase close to 49% of the stake from shareholders, including Saudi FAS Holding Company and FAS Real Estate Company, at a premium of about 33% to last week's closing price. EU member states have approved the launch of negotiations on strategic ties with 6 Gulf countries. That's as the bloc seeks to broaden its international partnerships amid tariff threats from President Donald Trump. Talks are expected to begin as soon as possible and to address a broad spectrum of issues, including energy and security. This latest advance follows a recent deal between the EU and the UAE to begin free trade negotiations aimed at removing barriers and fostering economic integration. And coming up, the DRC and Rwanda-backed rebels signed an agreement to end 4 years of fighting. More details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersace in Dubai. The Democratic Republic of Congo and Rwanda-backed M23 rebel movement have signed a declaration of principles aimed at ending nearly 4 years of fighting. Both parties came to an agreement in Doha, which includes finding a pathway to, quote, resolve their disputes by peaceful means and start negotiating a peace agreement by no later than August the 8th. For more, Bloomberg's Ondiro Ganga joins us now from Kigali, Rwanda. Ondiro, it could be a major breakthrough, but I should also just reiterate that it's a declaration of principles. What does that mean exactly? What do we know about what they agreed to?
Jumana, this is the working draft of what will be leading them to the peace deal that they'll be signing come 8th of August. And there are a couple of key issues that will be discussed leading to that date. And some of them include, one, exchange of prisoners and release of some hostages, particularly M23. They say that some of their members have been prosecuted by the government. Some of them are facing the death penalty, and they'd like leniency as a show of goodwill and good faith between the two parties, release of some of these hostages, and also exchange of prisoners in some cases. The big elephant in the room is territorial and sovereign integrity. This deal is calling for the return of government authority across all parts of the country, including areas which M23 is controlling. And that is where the big question comes. While the deal does not categorically call for the withdrawal of M23 in the 2 cities that they control, like Goma and Bukavu, it's leading to open interpretation for both parties. You have M23 and the spokesperson on Twitter saying that this is not a question of withdrawal, but rather enabling the government to come of age and start assuming its obligations across all parts of the country. And they say that in Goma, they are with the people and they are not going to get out. On the other hand, you have the government spokesperson saying that when it comes to this deal, there is non-negotiable withdrawal, which will be followed by deployment of military and government forces. There's also another layer to this, which is the withdrawal of Rwandan troops across the border. And Rwanda has always maintained that for as long as FDLR is neutralized, that is the only way they will lift their defensive mechanism. This is a deal that is expected to also foresee safe and dignified return of refugees into the country. But then again, it hasn't been received with the kind of warmth that you would expect. More caution than optimism, with people saying without justice and reparation, the deal is an exercise in futility.
But still significant, perhaps, because it does take the DRC one step closer to peace?
Absolutely, and it builds up to the peace process that the U.S. has been working on. The U.S. has been able to get Rwanda and the Democratic Republic of Congo to sign a peace deal. And now that conversations are ongoing and they're edging closer to a peace deal between M23 and DRC, it sets the stage for the meeting of heads of state between Rwanda, DRC, and President Donald Trump in the White House. President Kagame has always maintained that until the internal issues in DRC are resolved, the external issues are a non-factor that is up for debate. It also will face a couple of challenges, particularly due to the fact that peace deals are nothing new in DRC. Every 2 to 3 years, we see the same cycle repeating itself. Qatar will have to throw in an insurance package there to ensure that this deal is as airtight as possible, just the way the U.S. did with the economic pact between Rwanda and DRC. But until then, fighting is still ongoing in the country. Millions of people displaced, hundreds have lost their lives, and humanitarian agencies are crying because they are unable to raise enough money to deal with the catastrophe that is happening in the eastern part of DRC, which is just exacerbating human suffering.
Bloomberg's Ndira Ganga in Kigali, Rwanda. Thank you so much for the reporting. Now for a look at some of the other stories we're following today. Egypt plans to issue $4 billion of international bonds over the next 12 months. Authorities are mulling instruments, including euro and dollar-denominated securities and sustainability bonds, to cover about 40% of Egypt's external funding needs for the current fiscal year. The nation is seeking to diversify its financing sources while overhauling the economy after the worst crisis in a generation. Senegal has reached a new agreement with Saudi Arabia's Aqua Power to proceed with a desalination plant after a cost review. President Bassirou Diomaye Faye cancelled the $800 million contract last year over cost concerns. Bloomberg understands that the new pact lowers the price of water, reduces the government's annual rental fee, and doubles the project's solar energy capacity to 300 megawatts. And coming up, Elon Musk's feuds and wild bets are having an impact on the billionaire's businesses. We'll look at the details in today's Big Take next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersecci in Dubai. President Trump and Xi Jinping are reportedly expected to meet at or before the APEC summit beginning at the end of October in South Korea. The South China Morning Post cites sources saying Trump could make a stop in China on his way, or they could meet on the summit sidelines. Sources have told Bloomberg that Trump has been dialing down his confrontational tone with China in hopes of securing a summit. China is tightening controls on critical mineral exports, pledging zero tolerance for smuggling and illegal shipments. State broadcaster CCTV says Beijing's Export Control Office flagged recent cases involving false declarations and transshipments through third countries. China is enforcing stricter licensing for all rare earth shipments amid ongoing trade tensions with the U.S. And Elon Musk started his stint in the second Trump administration as close to the top of the world as any centy billionaire can be. And how many of them are there? He appointed himself head of the so-called Department of Government Efficiency, DOGE, the cost-cutting efforts which made him briefly one of the most powerful people in Washington. His enthusiasm at first pleased President Trump, but Musk's grandstanding has also cost him dearly. Let's go to Hong Kong now and speak to Bloomberg's Danny Lee. This is the subject of today's Big Take on the terminal. I'd highly recommend it to anyone if they have a few minutes to read the deep dive. But Danny, let's just talk about the upshot of all of this. A spectacular fallout a couple of months ago, was it a month ago, between Musk and Trump. What is this mix of business and politics actually meant for Elon Musk, both as a person and as a businessman?
Well, this is very much a cautionary tale of what it means to do business between two of the most powerful people in the world, and especially for investors counting the cost now of this kind of relationship, which has fractured so spectacularly. But let's take you back to where it all began and the fact that Elon Musk put all of his backing into Donald Trump to get him back into the White House at a cost of $300 million US, right? And so that has paid off to an extent where you had the likes of Donald Trump putting his full backing behind the likes of Tesla, encouraging Tesla sales. You had the likes of other parts of Elon Musk businesses as well, such as SpaceX benefiting from the relationship from government contracts and therefore being seen as the go-to operator for space. And so very much so, the valuation, the fact that Elon Musk's net worth has soared as a result, but then it all started to turn around quite quickly. We've seen Tesla's share price fall some 30% from the high. This relationship of you seeing Elon Musk parading himself around the White House over many, many months only to, in recent months, then start being disillusioned with the likes of Trump and then being very critical. So, and therefore now you see the likes of Musk exiled, and so therefore his businesses seem to face a more existential risk more than ever, given the recent history that it's been through.
Well, let's talk about his businesses. We get Tesla earnings this week, and I was looking at what analysts have been estimating. I mean, the consensus estimate for the second quarter earnings per share has been on a downtrend. Their sales have been struggling, particularly in Europe. What are we expecting? Could there be an upside surprise this week?
I think the negativity around Tesla stock, particularly as we get earnings on Thursday, is all very much baked in. And for terminal subscribers, when you look at the MODL function, you see just how much the fall in sales over the past quarter, 14% roughly. And you see the kind of cuts analysts have been making to the adjusted EPS and to the revenue, all on a downward slide. I think we're going to see an EPS of around 44 cents per share. We're going to see revenue coming in around just under $23 billion for the quarter. So it's not a great situation to be in, and particularly with the global fall in sales. But as Elon Musk has moved himself away from the politics, back to take control of Tesla and the various businesses, as key executives leave, this means that there can be a bit more of a clean slate, particularly where we've seen all the negativity, right? And hopefully from here on in for Musk, he can be judged on trying to turn around Tesla, which is going to be ever critical for investors who'll be watching and waiting for his words turning into actions.
Yeah, a lot at stake for Tesla and, of course, the other companies as well under his stewardship. Danny Lee, thank you so much. And a reminder that big take on Elon Musk is on the terminal today if you want to take a look at it. All right, a quick look at futures as we head out. Things are leaning towards the green for U.S. markets, towards the red for European. We'll talk more about that on the next show. But that was it for Horizons Middle East and Africa. I'm Johanna Versace in Dubai. Stay with me for Daybreak Europe. This is Bloomberg.